Okay, we have a stacked panel here. Okay, so as mentioned, my name is Nathan, Global CEO of Bitmart Exchange. So today's topic, future of trading venues. We'll cover three areas, hybrid markets, liquidity fragmentation, and institutional flow. So maybe just to kick things off real quickly, maybe just one or two sentences each. What is what is the one thing that centralized exchanges are still doing better than on-chain today? And then what is the one thing that on-chain is clearly doing better than centralized exchanges?
Yeah, so I think the first thing we would say regarding centralized exchange is obviously like the compliance to the trust would be something that centralized exchanges are doing better, especially in regulated markets like Europe with MiCA. And on-chain exchanges, I would say programmability and composability is something that's better done with like on-chain exchanges because you have more ability to have flow of funds and transfer and interoperability.
Yeah, agree with what you just said. On the centralization side, you also have like deep liquidity. I think this remains a big advantage that the centralized exchange have. Also in terms of user experience, quite often the user experience on centralized exchange can be better. On the on-chain side, you also have like self-sovereignty, so you don't have to leave your asset to a third party and trust anyone. You can continue to be in self-custody, and you also have composability, which is clearly an interesting feature.
Yeah, I think you mentioned most of them, but I will resume like centralized exchange. They have a really good execution and risk management. The liquidity that you mentioned, the tools that we have on the centralized exchange currently, I think the DEX they cannot compete right now. But on the other side, the on-chains they have this transparency and the settlement that right now the centralized exchange they have this philosophic debate that how we can integrate this and offer to our current like database or clients.
So the previous like panelists already covered everything. So I don't know what should I say. And Dorian, I don't know anything you would like to explain more. But yeah, just one more point that maybe the previous panelists didn't mention. I would say about the legacies and the histories. So centralized exchange, like for those who are still, I would say, I used to survive in this market. We have actually been through all those different cycles, bull, bear. So I would say we demonstrate resilience in terms of like risk management, infrastructure, the reputation that we build, the user base. I think there's something still like for on-chain still incomparable. And actually one more thing is very important is about the regulations. So regulation, and when we are talking of like institutions flowing into the market, traditional finance people coming into the TradFi world, coming into the crypto world. So always the first to go places are centralized exchanges, which they have a counterparty that they can like play against with.
So he actually took my stuff here because I was going to talk about institutional flow and how they actually need us compared to on-chain. I'm actually going to say that on-chain right now is still better at redistributing value. That's what they do best. What we saw with Hype, actually, if you participated to the airdrop at the beginning, you really saw how this protocol gave you a lot back, much more than what you're used to from the beginning and from other protocols as well. So it stands for now. But it doesn't stop there. Then there is the reality that my colleagues mentioned, the UX, etc., the institutional flow, all this needs to go through sexes, and I will go as far as to claim that, to be honest, DEXs have not been able to start representing the onboarding path to Web3. And so it seems they cannot do it. So it seems so far they cannot do it. Maybe they'll prove us wrong. For now, what it seems is there are actually, there are competitors. They are part of the competitions that we all have to face. And maybe that's all pushing us forward to strive for better efficiency. In the end, that will help you guys, because you're users. You want the most efficient solution, and you want to have the choice. You want to have the choice between a centralized solution that's a very easy on-off ramp towards your traditional financial system, your bank, your fiat, whatever. This also on-chain cannot be provided. So in many ways, we are still this middle ground space forward to move to pure Web3. And on-chain, they are innovating, they are redistributing value, there are great opportunities there, and I mean, we are listing them, so come on, let's celebrate their success together.
No, that's a good point. Okay, so I think because we have so many panelists, maybe we'll have one more that's for the broader team, then we'll go sort of, one each, just so there's not too many repeats. If you had to redesign your venue from scratch today under Mika, right, or Basil, what would you keep centralized and what would you push fully on-chain? And what would be
PR approves
modular?
this question.
Yeah. And I know this might be less relevant to Charles here, but maybe we can have Côme kick it off.
Yeah, sure. I think like the important thing is obviously like to remain within the compliant framework from Mika. So I think I would keep the identity compliance, user interface, custody part centralized to be within the regulatory framework, and then I would push for more payment, more tokenization to be on chain to kind of have like this hybrid model between on chain and centralized exchange, I guess.
And what are you guys, at Coinbase keeping off-chain purposefully due to regs and not necessarily the tech?
Like the KYC AML piece is the first and more important thing. I think when you look at the regulation, this is something like Dorian said, like the compliance and being on board with within the regulated framework, and also the on-ramp rails. It's still something that centralized exchange do best.
Yeah, as you said, the MiCA regulation does not really directly impact Ledger. Ledger is a technology company that is focused on security. And if we had to do everything from scratch, we would do the same because we really don't want to be a financial institution. We want to be not to be regulated and to be a technology provider. So this is a specificity that Ledger has in the ecosystem.
Welcome to the club, though.
Yeah, and I think it's a good choice, to be honest.
Yeah, I think, like you said, I will keep the execution and the settlement. I will keep it on the centralized exchanges for sure. And as you mentioned, like the transaction, all this transparency, the balance that you can see on your wallet, I will keep it on the on-chain. I think it's quite important. But I want just to put a mention, like in the last decades, we talk about this, or we create this philosophical topic of sex versus DEX. And I think we need to change a little bit the mindset, and we need to think about how we can build a market structure new for the new players, like the institutionals. And there is the thing that we need to brainstorm here in that kind of events to think about how we can do it, how we can build it.
Like I think people dig deep into this question. We have to really be careful, and we have to be clear about what are the regulators looking for. So why regulators would like to regulate centralized exchanges mostly are for the retail, the mass users, and most importantly, they got to make sure your funds are safe. So I think from this perspective, like custodian is a really core part of that has to be like keep offline, keep off chain within a centralized exchange framework. And for other thing else, like including like KYC, ML, or for sure, because these are the core, I would say, complements in the whole Mika framework. And other thing else, definitely. We're another thing that can boost efficiency, no matter like capital or whatever, like cost efficiency, everything that can go on chain, that can go on chain.
But I just want to say something about this, like the self-custody. I think at the end we can like find an hybrid model, no? If we have the trust, for example, on Coinbase, on Zoomex, or Kraken, or KuCoin, if the people believe on this platform and we can send to the users like the trust and confidence, why they need to suffer on these long things to understand how they can custody, because institutional players probably they don't want to waste time on this, no?
Well, I'm not going to choose the popular option, but I'm going to say, honestly, a centralized order book so far is better off-chain. Like, it's better to have this centralized place where all the buy and sell orders are and where you can actually maximize the efficiency of all the type of orders that you can go through. I've seen decentralized order books. Some of them work really fine, to be honest, and you can go and check your DeFi and you will find some of them that are really functional. But so far, I have not seen the level of efficiency that we have off-chain for that. And as you were mentioning, custody, very important to keep. Well, you mentioned off-chain, but it's actually like it's on-chain, just cold. Yeah.
Just to make sure I understand your point, like, do you think it's more efficient because it's private or because of speed? What's your point exactly?
Yeah, speed.
Mostly speed.
Yeah.
Okay. So the model of Hyperliquid, for instance, where the speed is.
As I said, a real competitor to us.
Okay, okay. Because in this case, it's completely public.
Yeah.
Yeah.
Absolutely.
Which is not the case for most
But
centralized
and I
exchanges.
will add on top of it, we are better at providing today protection against market manipulations than DEXs are. I will take the 10th of October as example, where you saw all market makers, like I would say, bail out on their responsibilities and just say that liquidity isn't there anymore for, let's say, a couple hours. What happened on Hyperliquid was everybody gets liquidated.
Yeah, but
What happened on Kraken was you don't get liquidated.
one could argue that there was no asymmetry of information because like everything is.
Well, one would be wrong.
Why? Why? On Hyperliquid, like there was no
Why?
asymmetry.
Do you want us to check the orders on Hyperliquid right before the announcement about these taxes, commercial taxes? Yeah?
Oh, and it doesn't change whether it is on centralized exchange or
I mean, the
decentralized
thing
exchange.
with DEX is
there
we
might be
cannot
this
prove market
asymmetry.
manipulation. I agree with you on
Yeah,
that.
no, what I mean that when the order book is public, there is no asymmetry of information for the trader about the order book.
The order book is actually public on SX as well. You can see all orders.
It depends.
It depends on the centralized exchange. I agree with you.
I still have to see a centralized exchange that doesn't show you the full.
But you mentioned something about manipulation, and I don't know, like October last year, I think everyone is aware, and we know, the ones that we are here, we know how it works and what happened, no? And it comes from one of the biggest, like centralized, most of this manipulation, so I don't know what you think about this.
I leave you with that.
Well, since there's no representatives from there, well, maybe
Yeah.
we'll skip that.
He wants to go to war, no doubt.
No, it's great. And on the order book speed side, absolutely, I completely agree with you there. So Fernando, I think hybrids can obviously potentially be the best or worst of both worlds, right? Is there sort of a concrete risk or cost that kind of stopped you guys from shipping a hybrid feature before? And any such cases for Zoomex?
Yeah, here I think the topic is the efficiency and also how it's complex for the retail users, the final users. Currently on Zoomex, we are trying to build this infrastructure and offer this kind of like hybrid model, but it's quite complex. We have the technology, but we didn't have the final landing page, to say, or LP UX. And I think there's the milestone that we need to accomplish, and most of the centralizers need to work on this, how we can build this market structure or this hybrid model structure that can be a solution for everyone on the industry, institutional, small retails, etc., etc.
Okay. Tika, so for you guys, right, at KuCoin, is on-chain more of a distribution channel for liquidity, or is it sort of a, destination, so to speak, that you guys would ultimately want your users to all migrate to?
Well, this is a really interesting questions because how should I put it? So yeah, not just from KuCoin. I mean, like all the centralized exchanges, we are now running our own wallets as well.
Yeah.
So the wallet is actually the gateway for our users to get on-chain, to access to different kind of asset class that are not yet on the centralized exchange order book. So I think eventually, I would not say a complete migration, but it really depends on the user's behavior and the demand, the actual demand. So I mean, like KuCoin, definitely we are not the first to roll out our wallet, the Web3 wallet, but we are seeing the demand there. That's why we like feedback. We hear our customers, clients' feedback, and we work on that. So, but from the institutional perspective, I would say the demand isn't that strong at the moment when we are talking of like traditional, like crypto native institutions like HFTs, market makers. They are still like trading happily on the like centralized order books, and on of course like they as long as they expand their venues, let's say to on chains, I mean like eventually wherever they can see a profitability opportunities for making profits, and then those players will also get on chain. And I believe that at this moment the whole on chain and the web the wallet landscape industry are more retail driven.
Right. And how has the on the retail side, how has the reception been for just for you guys on the on-chain wallet side so far?
One hard question wasn't enough.
Yeah, I would say so. On-chain DeFi is really crypto native. I mean, like really only for people. You gotta be in the in the circle long enough. Otherwise, for let's say a new user, let's say my grandma, like she has no idea what is. She might heard of crypto, she might heard of Bitcoin, but she definitely would know. I have no idea what's the difference on trading on KuCoin exchange and KuCoin Web3 wallet. So I think this is still a really, it still takes a little bit more time for the mass public to really adapt on-chain ecosystem, and also to get used to with more DeFi things. So at the current moment, so like KuCoin, we have built it with Web3 wallet. We are seeing momentum as well, but like if we really want to see this volume to get to the level like comparable to what centralized exchange order book is doing, I do believe it still take a little bit more time.
I agree that the distinction can be difficult for newcomer in the space. However, the distinction is big. Like owning really Bitcoin is very different from being exposed to high bit value. On one side, you are like benefiting from the permissionless value of Bitcoin. On the other side, you are just exposed to a value which is very different.
To press market.
Yeah, and
Like you are at your bank, they have a debt recognition of what you own, or you actually own.
Exactly,
Yeah.
exactly. And this was the reason why we created Bitcoin and this space at the end. So I think this is the core value proposition of the space. So we should not forget this and make sure that everyone understands this distinction, because it's a big one.
Absolutely. Okay, let's move on to the liquidity, fragmentation, and routing side. So this one's for Côme. So if you had a blank sheet, what does so-called frictionless cross-venue margin and collateral look like? And who loses revenue if we get there?
That's a fair question, I guess.
So happy to be here.
Yeah, and I'll give you the mic after Dorian. I think like if we were to like work out of like a blank sheet, potentially having like better collateral management across different venues, you can like use across different products. Could be like a tokenized collateral that you could be using across these different venues and these different products with like I guess on-chain settlements, and all of this feature would be the reason, the solution. Once again, like it's gonna all depend on the regulatory and compliant framework, because you need to be compliant on this collateral also.
I think also the fragmentation comes from the fact that blockchain were not scalable enough in the last cycle, and that's why we created like so many different blockchain that compete each one against the other in order to have this scalability. On Ethereum, they also created the notion of L2 in order to solve this scalability challenge, which created a new challenge, which is like the fragmentation in liquidity. But at the end, if we could solve this back in the days, we would create a more scalable blockchain, which would be the one. And we are not in this situation, and that's why we created this fragmentation.
But do you think like we are going to clean this, or we are going to make invisible for the users, for the final users?
No, I think it will consolidate. There is no reason to have like thousands of different blockchain. With at the end, there will be a couple of winners with specificities that make them valuable and relevant for the future. But there will be consolidation for sure.
Yeah, I agree with you.
I translate, do not hold every meme coin that's out there.
Yeah, and look, at the end of the day, there's, as you mentioned, right, there's no reason to have so much infra, because at the end of the day right now, even existing chains, they need to build their own consumer dApps to actually survive, because there's no value capture. And I think valuations, I think for the most part, most realize it has a lot of room to the downside right now. So there's certainly not much given to infrastructure, I think.
Yeah, but back to the last cycle where we had these scalability challenges, we had this problem to be solved, and the investors
Right.
wanted to solve it, and they spent a lot of money on plenty of different projects. And now we are in the situation where these projects were built, and the product market fit is not that huge for most of them. So this is where we are. So this is why I expect some consolidation.
I was going to ask tough questions to each of you guys. Do you think we have solved this question, so to speak, with the current debate?
Of scalability?
Yep.
Much better than where we used to be. Probably not completely.
Like, is it still an argument to launch a blockchain? I don't think so.
For now, no. I don't think so. Yes.
I don't think so.
Yeah, block space is not, it's commoditized. I think there's no, right now, it's not, there's enough infrastructure to go around. There's just not enough actual users, use cases. I mean, look, if you look at Polygon, for example, if not for Polymarket, why would anyone need to go on that chain? I mean, just frankly speaking. So I think that's the harsh reality right now. You look at every ecosystem fund that has a war chest, they're not spending money on anything but incubating their own consumer dApps. It could be a prediction market or whatever's working at the moment, but if they don't get there within the next couple of months, there's going to be a lot more issues.
It depends on how much money they raised back in the days. Sometimes you have blockchain that continue to survive just because they raised a ton of money, but there is not so much usage, and this is the harsh reality as well.
Yeah, and I think this is maybe a bit off topic, but how I just mentioned prediction markets, right? That's obviously sort of one of the main topics in our industry.
Can I
right
just
now.
ask, are you aware Polymarket is forbidden in France?
For what?
Is illegal in France.
Oh.
Yeah,
Well, then we should not be talking about that right now.
it's
I mean,
not
you
illegal
choose.
to talk about it.
Yeah, it's no. I mean, I think it's for the most part something that's been a hot topic, and I think obviously there's been a lot of news out of different exchanges looking to offer that product in one way or another, and some having incubated their own projects and whatnot. But it really comes down to, do you feel that the retail users that were once betting on meme coins and whatnot, it's you sort of either gone institutional or you went the other direction towards prediction markets. Obviously I think users have matured and wised up, but for example, a very good example, right? If you look at what people have been very focused on lately, it's weather. And why is that? Because you can't manipulate weather. And the general consensus is that a lot of different asset classes, including Bitcoin, Ethereum, Solana, can be quote unquote manipulated, right? So it's certainly, I'm just curious sort of your views on this topic while we're on it.
I may start on this one. To be honest, it's very interesting that predictive markets are acting as derivatives of the derivative market.
Yeah.
Like we created something that's far more grounded with a statistical noise. People are not betting with, I would say, like very precise instruments. The leverage is not so precise as well. And it creates an enormous amount of statistical noise in the back end that actually drags to a direction to, I would say, like a decision for the market, so to speak. to be honest, quite surprising to see, but absolutely applicable to any kind of asset that you would think of. Should it be from the information market, from the like traditional asset classes, tokenized asset, etc., whatever. But the reality is we are trading narrative now. Like we are directly trading a narrative, and that's what you're betting against. Then you are even betting on the fact that it can be manipulated, because if you know that, you can actually take position on predictive markets.
Absolutely.
Yeah, well, I do think like the creation of like prediction market is quite human, right? Like everyone likes to gamble. Everyone likes like to bet on something.
And not to count precisely how much.
Yeah, and but I think from the user's perspective, the behaviors are quite different, like between like retails and institutions. Like for retail, like an individual, they really like takes it at betting, like betting the weather, betting like what will happen tomorrow. So some sort of fun. They're looking for fun, and some people is just addicted into it. But for institutions, they're more like for institutions' participation in prediction market. There's more calculation, so they don't bad. They calculate everything. They do every decision, every bet through like statistical like analysis and everything with quants. So I mean, from a centralized exchange perspective, let's say from KuCoin, yeah, of course we are definitely aware of the latest trend, and but I mean, however, like for rolling out a new product, especially like let's say prediction market, which is very like sensitive to regulators, we decided to be more like cautious. To especially on the terms and conditions, just to see like which area, which region, and which jurisdiction that we should offer such kind of products. So yeah, like back to your questions, yeah, we are looking into it, but let's see.
Yeah, I think prediction markets are really interesting, and they are definitely not a gambling platform or a betting platform. This is a very different beast. Like prediction market is a market where asymmetry of information plays out. People who has an edge sells it. This is what prediction market is about, and that's why I feel it's really interesting. Some people are gambling on it, but this is not what prediction market is
Yeah,
about.
I
think.
agree, but at least more on the human nature side. Like the mass public definitely will just see it as a gamble venue instead of like being so so rational to see the true nature of prediction markets.
But probably because we have a lack of education on the prediction market, for the retail users. And if we accomplish this education level to that one, they are going to see that it's not gambling and it's another tool to trade. Yeah, I agree with.
And I think when you look at what's happening in the US, for example, they're using more and more prediction market on platform like CNBC just to rely on like market information and use this pricing on the uncertainty on event happening in the world. And I think it's like kind of a cool use case. Like we've integrated in US prediction market via Calci. We've acquired a company called the Clearinghouse. So we're like moving forwards with this because also there's like a retail demand, and this is what we're also trying to do.
Yeah, quite often prediction markets are better than polls or this kind of thing. Yeah, for election, for instance. So.
I guess this is still the most interesting topic for everyone. I was given the 3-minute warning, so we have one last question for everyone. So in 5 years' time, if your exchange is not a top destination for institutional and on-chain native flow, what was the strategic mistake that you made today?
Yeah, maybe I can
Can I start?
Good one.
It means we didn't compete against Coinbase enough.
This is a really difficult question. I mean, like everyone should like be very careful in saying this.
Yeah, I think maybe you can just speak about what the institutions are looking for. I think they're looking for a platform that's well integrated across all the product stacks, so having custody, financing, trading capabilities, and also having a trade like a track record of having worked with like in the space for a long time, having known like the ups and the downs of the market, having worked with trusted clients. So I think this is like what institutional clients are looking for and will be looking for in the future.
Yeah,
Fernando?
from my side, as just mentioned, I cannot like deploy too many things, but I think the challenge for us is basically how we can build an infrastructure that make the institutional feel like they're like trading on forex and equities. I think that's the jump that we need to do, and yeah, basically, I think if Zoomex didn't accomplish this in the next years, we will figure out what we are doing. You know, let's see.
Yeah, I agree. So I think the key point is that like everyone is speaking of like today, nowadays, 2026 is actually the convergence between like TradFi and the crypto and native market. So if like any of the centralized exchange couldn't like seize this opportunity, they couldn't like tap into the water from like from the TradFi market. So which means that you cannot gain trust from traditional institutions, then you'll lose the game very likely because the crypto overall market cap is still very small. We are growing it, and we are all looking into, let's say, so a lot of like crypto native projects, we are now looking to have fundings from TradFi, family office, asset allocators. And at the same time, traditional asset managers like the big names of BlackRock, Fidelity, they are doing tokenized projects, not just to get the fundings from traditional family offices, but also want to tap into the crypto native market as well. So when we're speaking of the convergence at this moment, so I do strongly believe that if the next 3 to 5 years time, the battlefield will be how exchanges or how venues to capture all those flows from traditional institutions.
Dorian?
I'm just gonna conclude with the practical aspect of where I think we will be in 5 years' times. Gonna speak a bit about Kraken. I have to in the end. So as you know, we've been a pioneer in the space, been there since 2011, etc. We had audits already when it was not a thing in 2015. And the reality is we have all seen crypto go through different stages. There was this infancy, there was this pirate era that we all remember maybe, or that we've heard of from a bit earlier stage. Now we are more in this, how to speak, like authorized piracy, when you get your letters of commendation from the state and are authorized to sink your, well, your fellow man's ship. But then the reality is we are going next stage, and next stage is most probably what has been started by others, which is we need to come clean. Now we are competing with traditional finance for real. We are in the same space. In 5 years' time, it will be very difficult for exchanges, for example, large exchanges which claim asset under management, not to show what they have in depth, for example, so that you have a full liquidity picture of what they actually own and what they owe. This is one of the practical aspects I see going
Well
forward.
said.
Just
Well said.
just to put a last word, like yes, and also I think like the banks, the traditional banks, they are also going to suffer. I think in the next 5-10 years, because at the end, centralized exchange, we can compete with them, you know, in different like products and services. So let's see what happens.
So just a quick one on that. So we don't run an exchange, and it won't happen in the next 5 years. However, like as it was mentioned, we are entering a new era where traditional finance is like competing or trying to eat the crypto world. And there is a big difference today in traditional finance. When you want to trade in traditional finance, you don't put your funds into the exchange where you will trade. Well, this is the case in crypto. And I feel the regulation that is actually in place in traditional finance might also happen in the crypto space, where you will have different entities, one that is in charge of doing the custody and another that is in charge of doing the exchange side. Today, there's two things are merged, which create counterparty risk for traders, and I don't think this is the sense of history. And by the way, at Ledger, we have created a technology platform that solves this part, where participants can trade off exchange on the platform, just send a message to the different exchanges, and at the end of any period of time, they do the netting and settlement of positions.
Sorry if I have
Very
like 10
important.
seconds, because
Sure.
what you told actually made me think we are so far from where we were in 2022. We will not get away with another FTX. Now we are not in this stage anymore, and our industry is looked upon. Everybody is looking at us. If whatever we do, all actors right now, It's really about not reproducing the same mistakes. We are building credibility for the entire space. It's not like an infancy anymore. There are lots of large companies, large old TradFi institutions who are really digging into it, and they will not let us go away with what was done in the past. That's also why we are facing so tough regulation everywhere.
Absolutely. Whether or not it's segregation of funds or it's how you get to the next level is by having that large flow of institutional capital trusting our venues. I think that's ultimately what everyone's looking to achieve. But I want to thank everyone once again for the wonderful panel. Please give it up for the panelists. Thank you.